All right, traders, just a quick update on the dollar yen. Last week, the pair reached 12-month highs, getting very close to that 159.50, that 160 psychological level. Now, after this, my inbox saw quite a couple of you asking whether we should start worrying about the possibility of intervention again. Now, the reason why the current price level is important is because the last time dollar yen traded up here, back in April and July of 2024, Japan's finance ministry intervened in the market. So, what do we mean by intervention? Intervention is when Japan's finance ministry basically tries to stop disorderly weakening of the Japanese yen. And they do this by instructing the Bank of Japan to basically sell dollars and buy yen in the open market. Now, the bank has intervened quite a couple of times in the past 3 years because we've seen massive amounts of weakness in the yen and obviously an explosion in the carry trade. And the most recent examples of intervention was back in April 2024, where the dollar yen was knocked down by about 400 pips in around an hour or so worth of trading. We also had another episode back in July of 2024, where the intervention saw the dollar yen drop almost 3% in just a couple of minutes. So the reason why it's important is because when these guys do step in, it's usually not a polite move, it's a massive rug pull. Now, last week, when the dollar yen revisited that 159.50 price level, we had Japan's finance minister actually warning markets about this. She reminded markets that, hey, we can take decisive measures against sudden disorderly movements, basically referring to the possibility of intervention. Now, when it comes to intervention, traders usually want to anchor on specific numbers like 159 or 160 or 161, but Japan, the officials there, they're not concerned about the absolute number, but rather how the price is behaving around it. They are basically watching the tape for any crazy or excessive volatility. Now, in the week ahead, we have quite a few ingredients for a very fast tape. We have the ongoing geopolitical volatility due to the whole Greenland situation. We have the CPI data for Japan coming up. We've got the Bank of Japan coming up with their rate decision on Friday. And thirdly, we are also seeing this continued rise, upside pressure in Japanese bond yields because the markets are demanding higher and higher risk premiums for holding long in bonds in Japan due to all of the fiscal concerns. Now, any one of these things can act as a catalyst, which is it if it were to come out, much worse than expected and push dollar yen into those upper danger levels. It could, offer these officials the reason that they need to call it disorderly and potentially trigger some intervention. Now, here's the thing. Just shorting the dollar yen in the hope of intervention is usually a losing strategy. If you're going to be short dollar yen just to try and catch the flush, you're basically just paying carry in the hope of a move lower, and hope is not a risk management strategy. So it could take weeks, it could take months for intervention. It might not even happen at all. So that's why intervention trades, when they do happen, if you are lucky enough to be at the screen when it happens, these are event trades and usually not something that you can position for ahead of time. If it does happen, there's usually not a fixed time for it to take place. Normally, Tokyo daytime seems to be fair game. Japan has also previously, and this is interesting this week, they've also previously been more strategic with intervention episodes by basically choosing times when the dollar was already vulnerable, basically using that momentum in their favor. So with the recent tariff escalation between the US and Europe over Greenland, we have seen the dollar weaken, so we do need to pay attention to this this week as well. So what do we watch from here? If you only remember a few things from this video, make it these ones. Firstly, anything between 159 and 162 has been fair game in recent years, so pay attention. If we do see moves into that zone, it's definitely one to watch. Now, on average, these drops of intervention is between 300 and let's call it 400, 450 pips. So if you get to your screen and that move has already taken place, be very careful on trying to chase it. It can get dangerous. So whether you are long or short dollar yen right now, pay attention, know the risks, know the levels, and don't assume you'll have time to think when it hits because these moves can be absolutely ruthless.